Hey guys, what's going on? I wanted to follow up on the video that I did last, well, it was Sunday. So I put the video out on Sunday talking about AMC and stocks that move with it, in particular BB, Blackberry, because I traded that last week and got that on the video there. So if you watched the last video and saw what I said was going to happen with AMC happened, so that would have worked out for you. And then also, if you would have took some BlackBerry, that would have worked out for you too, real nice. So let's go over what happened. In the last video, I said this area here on AMC, when you look at the daily chart, you see this big area where there's like not much purple lines. So each one of these lines is support and resistance that I drew out previously. So I know when I'm trading, to sell into this as I'm going up. And if we break through it, wait to sell as I get closer to the next purple line, because that's the resistance. That's where it's usually going to have trouble getting through. And then vice versa. So if the stock is dropping, I want to buy on these purple lines. And you don't have to buy, of course, don't always buy your whole position at once. Buy 25% of the time, 10% of the time. So if you want to get 1,000 shares, scoop up 250 at a time. Scoop 250 on this line, scoop 250 on this line, right? Then your average is like right in the middle. So even if you get a bounce back up to the next line, you're still going to make money. Whereas if you took 1,000 shares right on this line, and then we go down to here, you're down money. Now you need a bounce much bigger to start profiting. So anyway, yeah, this area here, I think it starts at about 28.85. So from 28.85 all the way up to about 32.85. So pretty nice area. 28, so 29, 30, 31. About a $4 range here, where there's not much, to block the stock from stopping and going where it's going, right, which is higher. And I said the stock's going to go higher because a lot of people were worried when they saw the big red day on Friday, but that was healthy, like I was saying in the last video. That's just the gap fill. Now, here in the after hours today, we're gapping back up, but we'll see how it looks in the pre-market tomorrow. So anyway, yeah, I was saying that in the last video I was going to take 1,000 shares or whatever right around this level and then try to sell up into here. I got stuck today because something happened when I bought in. I bought in, I saw all this volume coming in right around 11:45, which is weird, but I've seen AMC run right around that time before and then go right into about 1 o'clock and then dip. And that's exactly what it did today. I don't know what caused this huge drop right here, but so I got in 950 shares at $30.91. Stock got up to $33.53 and then just dropped like a rock down to about $30. So pretty much all my profit was wiped out there. I went red a little bit, but we'll call that a shakeout. I'm not going to get shaken out of my position. So I held on to it for a little bit and then I sold here because it kept on trying to, this area here, it was kind of hesitating a little bit, and I had a feeling if we weren't getting through that, at 2:30 or 3 o'clock, we're not going to get through it before the market closes. And I was kind of under the assumption that we were going to push in the after hours because it's easy to manipulate stocks in the after hours. There's not a lot of volume. So in other words, if you don't know much about options, pretty much you can buy an option for very cheap because it's not. Let's say you have a $40 call, the stock's $35. The stock's not at $40, so the probability of it getting to $40 to buy that contract is very cheap because maybe it's not going to get there. But if it does get there, you'll be rewarded pretty nice, sometimes a couple 100%. So a lot of hedge funds, what they'll do is they'll buy their options in advance. And if you look at the options on this, the volume is insane. And if you don't trade options, I know this kind of sounds like gibberish, but this volume on these options is really heavy. 75,000, 7,000, 10,000, 13,000. Even the $50 call, you got 33,000. Down at the $59 call, 20,000. So, and look at the $73 call for this week. So they're saying to get to $73 this week, there's 60,000 contracts that were bought. That's a lot of money. So we'll see. This could squeeze really nice this week, and I'm hoping that it does, and I can get back in on a dip. So anyway, that's AMC. This happened. Kind of called that one there. That would have been some easy money. And then Blackberry. So if you look at Blackberry, I was saying in my last video, Blackberry runs with AMC. So, if you can afford as many shares as, maybe it's smarter for you to get Blackberry. So let's say you have $500. So if you had $500, you could have gotten you could have gotten 16 AMC shares. Let's say you got your $6 move. So you would have profited $96. Whereas if you had Blackberry, let's see real quick, you could have gotten, let's do 500 divided by, let's say we got an average of $10.60. So that's 47 shares. And then on 47 shares, if you got a $2.50 move, you would have made 117. So 117 rather than 96. That may not sound like a lot, but when you do that every day, 5 days a week, and then you consider, the fact that it's exponential growth, because that 117 is now going to be put in towards your next stock purchase, which will allow you to buy more. And then that number will multiply bigger and bigger and bigger. So you want to kind of have an idea of how you can make more money and how you can make the most money with the money that you have. So I was saying Blackberry is a pretty safe buy. It's a cheaper stock. And this thing did exactly what AMC did, right? But actually it was kind of stronger. If you look at this chart and you compare it to AMC, so where are we on the 5-minute chart for this one? So we'll put this one on the 5-minute. So yeah, pretty much same thing, right? But it really, in my opinion, had a bigger move, because this is what we're looking at Monday. Or today's Tuesday, actually, because of the holiday. Sorry about that. Yeah, so just dipped in the morning and then ripped all afternoon. Same thing here with AMC. Dipped in the morning, ripped all afternoon. And then in the after hours, AMC started ripping. This one did too. So this is moving in sympathy with AMC. So you can take advantage of that and get in on it. Now, when AMC drops, get out of Blackberry. Okay, so this is another stock that I took a position in. I'm going to swing overnight, maybe even another day. I'm trying to get to like $5.60 on this. So my average is $4.60. Got a pretty good amount of shares. So we'll see. When I look at the weekly chart on this, that there's a lot of momentum. So I think we can get continuation. And look at this. Each one of these candles is a week. So we've been going up, up, and up. And I drew out the, support and resistance. Well, I drew out the resistance. So, the next resistance is at like 520. And then once we get past 520, there's a little bit more, like a couple cents. And then after that, the next resistance not till about 575 from what I see. So hopefully we can push through that tomorrow. I would love it if it goes through in the pre-market. I'll get rid of it right away, take the money and move on to the next one. But yeah, that's those three. So that stock is called TELL, T-E-L-L, and I've been trading that for a while. Months and months ago I first got in. So yeah, that's TELL, Blackberry, and AMC. So the squeeze should continue here on AMC. You just have to be prepared and have your support lines drawn out where you can buy, so where it's smart to buy, and then know where to sell. Now it's going to be a little tricky to sell when it gets past them all-time highs like it is right now. But what you can do for that one, when that happens, is use Fibonacci extensions or Fibonacci extensions. There's a tool on here in Thinkorswim. I'll do a video on that some other time. But basically, it's like, well, how high can you go when you're past all-time highs? When do you know when to sell? And one thing you guys should really rely on too is the volume. If the volume is consistent and you got that price continuously going up, stay in it. If you see the volume drop down, price is dropping down, just get out and then buy back in on support. So, yep, that's these three trades. You guys have any questions, just let me know. Drop them in the comment box, and I'll be more than happy to help out. Thank you.